Alright guys, so in this lecture, I'm going to show you how you can identify daily bias easily. So this method was actually taught by ICT himself in one of his videos. I believe it was from Sniper series or Market Maker, I'm not quite sure. But yeah, he taught that himself. He said that if you, as a beginner, if you are having problem with finding daily bias manually, you can use this method. Okay, it's not gonna be as perfect as finding the daily bias manually, but it's gonna work. Okay, and it's better than nothing. So go to the indicators tab here, type in moving average, right? And you open two moving averages. So the one length is 9. So the length of the first one is 9, and the length of the second one is going to be 18. Once you have that, so whenever the moving averages are to the upside, right, after the cross, your bias is bullish, okay? And whenever the moving averages are to the downside, your bias is bearish. Simple as that, guys. No need to overcomplicate it. I repeat, when the moving averages give a cross and the price is above the moving averages, or the moving averages are up to the upside, like here, your bias is going to be bullish regardless of what price is doing. Okay, so this is one way to set foundation. Okay, so what I have found by backtesting is once you have a cross, right, the next 2 to 3 days you can have a bullish bias, but after that you want to look for some sort of liquidity sweep before being bullish again. Okay, so right here you can see we had 3 consecutive bullish days, so you have to expect some sort of retracement, and that retracement could be from this fair value gap that was here. So when price comes back to fair value gap, you could either be bullish again here, or what you do is you wait for some sort of liquidity sweep. So this right here is a liquidity sweep, and price candle closes here and your bias is bullish. Very, very simple, guys. Okay, and right here you can see we have a cross, I believe right here. So the next day was bearish. Okay, but then what happened was we took out this high here, and you can see the next day was bearish. After that, what happened was we took out this high over here, and after taking out the high, you can see the next couple of days were bearish. So over here we have a cross again, actually cross here, right? So the next day was bullish as hell. And remember the volume imbalance video that I taught you guys? There is volume imbalance right here. And also what happened here was price took out this liquidity. So then the next candle, after the close of the next candle, your bias is bullish. So see that move? Yep, that's what I'm talking about. Crossover here. You can see candle closed here. Well, the next day I would say was bullish. Okay, so there's nothing that you can do about it. But then the next 2 days were bearish right here. After that, you would have looked for liquidity sweep. So price swept the liquidity here. Price consolidated for a couple of days, but then you had this, up and down, up and down. But then you had the next couple of days, bearish couple of days. Okay. And after that, price swept liquidity, boom. Very simple, guys. So let me show you guys here as well. We have a cross, boom, cross over here, boom, move to the upside, cross here, bearish, cross here, bullish. Okay, you can see price swept liquidity here as well, move to the upside, price swept liquidity here as well. Well, you could have been bearish for some days, but then there was this, this auto block right here. Price came back here, push up, but all you need are moving averages to identify daily bias, guys. It's not going to be as accurate as finding it manually. If you want to learn how to, identify a daily bias manually with a higher accuracy level, you can watch my video on YouTube. It's absolutely free, or you can learn by ICT himself. So there's another trick that you can use, and that trick is by me actually. So you look for ABC patterns. Okay, so this right here, you see ABC. When you have a sweep, you wait for price to close back, and then when the price comes back to a retest, as soon as it retests this line, your bias could be bearish. But as you can see, the moving averages here were bullish. So you gotta play accordingly. If the moving averages are bullish, you look for bearish ABCs. Oh, sorry, bullish ABCs, okay? But I'm just showing you, if you don't want to use moving averages, you can use this technique as well. So let me show you how. Let me go back right here, remove the drawings. Let's disable the moving averages. So right here, you see we have A, B, C, right? So A, B, C. Then the price goes above the line, and as soon as you have a retest, your bias becomes bullish. Okay, there was fair value gap here as well, and you can see how this works. So your bias for the couple of days was bullish by identifying a daily bias. Okay, you can see right here we have A, B, and then C. Price comes down, retest here, and boom. Price over here, A, B, C. You can see that price, yes, it did go up here to fill in some imbalance or fair value gap on the lower time frame, but then the next couple of days, as you can see, were bearish. So this is it for identifying daily bias. It's not going to be as accurate as finding the daily bias manually, but it's better than nothing, and it is going to increase your win rate definitely. So see you guys in the next video.